right. Hello, everyone. Welcome to today's webinar on securing Treasury technology using ROI to pave the way. We ask that anyone who has dialed in, please mute your microphone in order to eliminate any background noise during the presentation. This webinar is going to consist of a 55-minute presentation followed by a 5-minute question and answer session. Please feel free to post questions in the chat box throughout the webinar, and we'll either answer them as you ask or in that Q&A session. If we do not get to your question, someone from our team will follow up with you. Today's webinar is eligible for CPP and FP&A recertification credits. The credit form, a copy of the deck, and the recording will all be sent via email in the next 7 business days. Today's presentation will be given by Debbie Dennison and Craig Jeffrey of Strategic Treasurer. Debbie Dennison is a senior consultant at Strategic Treasurer, responsible for leading client projects and relationships across working capital, cash management, liquidity management, treasury technology, and risk domains. Mrs. Dennison has held senior treasury positions with global, multinational, and Fortune 500 corporations in the fields of utility, airline, consumer products, and pharmaceuticals. Her leadership experience comprises leveraging technology to proactively identify and implement leading practices with respect to global liquidity, pooling structures, credit card programs, and accounts receivable factoring. Craig Jeffrey formed Strategic Treasurer in 2004 to provide corporate, educational, and government entities direct access to comprehensive and current assistance with their treasury and financial process needs. His 20-plus years of financial and treasury experience as a practitioner and as a consultant have uniquely qualified him to help organizations craft realistic goals and achieve significant benefits quickly. Welcome, Debbie and Craig. I will now turn the presentation over to you.
Thank you, Meredith. Welcome, everyone. Good day. Hope you're having a productive day if you're in a warm part of the country or if you're dealing with the blizzard in the northeast part of the country. So glad to have you take time out of your schedule to discuss return on investment considerations with Treasury technology. So throughout today's session, there's ways to participate. As Meredith had mentioned, there's a chat box for questions as they come up. Feel free to type those in there. We do have, I think, at least one polling question today. We'd love for everyone to take part in that to share what your thinking is or your planned actions are. So we're looking forward to that. So what's our agenda? You can see the topics of discussion laid out on the side here. We're going to begin with the dilemma that Treasury faces. Treasury may not be shrinking in their size, but it tends to be very limited, and expectations have increased. We're going to spend a few moments talking about the technology landscape for Treasury. That includes Treasury management systems, risk systems, and 5 other broad categories of Treasury technology, just as a way to set the stage for the technology that's out there, even though most of the content will be focused on a TMS discussion for return on investment. We're going to cover elements on what does it mean to get a return on investment for Treasury technology, as well as the broader business case for a Treasury management system. Business case being all the reasons you do it. Return on investment is usually focused on the financial side of things. We'll look at organizational complexity, which challenges many groups dealing with types of complexity or intensity. This may be how many countries you're in, the number of functions you need to perform, the currencies that you deal with, the level of commodity risk that you have to handle, volumes of activity. All of these lend themselves to complexity, and that complexity can help drive what is the right level of response you need to make to that with technology. We'll also look at a couple of case studies, and then finally we have some takeaways. And then throughout or at the end, we'll have time for some questions and answers. So we'll do our best to answer those during the session. And if not, we'll cover those later. So with that, I wanted to, again, welcome you to today's session, and also welcome Debbie, and I'm glad to present with her. And she'll take us through the first section.
Great. Good afternoon. Thank you, Craig. Welcome, everyone. Appreciate your participation and joining us today. We're going to start out this afternoon talking about some of the Treasury's functional requirements. Treasury is ever increasing in terms of the amount of challenges that it's faced. And with the challenges, some of that can be driven internally, some of it can be compliance related that are coming from regulatory authorities. But the challenge that's often being faced by Treasury with this is that we have heightened expectations about what Treasury needs to accomplish, but at the same time, we're struggling with reduced staff. And the graph that we have here is from our 2017 Cash Forecasting and Visibility Survey. And what it sort of highlights here, if you look at sort of the yellowish orange color bars, those are representing sort of the basic cash management position, forecasting, and payment responsibilities, sort of the bread and butter traditional responsibilities of Treasury. But some of the other areas that are highlighted by the blue bars are representative of how our responsibilities in Treasury are expanding. They include, just to highlight a few, FX trading, risk management, investment and debt management. More and more analysis is being required by the Treasury teams. And with this, we are often turning to technology for a solution. In addition to, or to expand further on the limited staff, our 2017 Working Capital Management Strategy Survey, we saw smaller organizations, which are represented on the left as the lighter blue bar. Those are organizations that are 250 million or less, and the darker blue bar are larger organizations. Here we can see that 68% of smaller organizations are currently working with a Treasury staff of 3 or fewer, and 27% of the larger organizations are operating with a staff of only 4 to 6. Clearly, many organizations are operating with limited levels of staffing, and on the right side, we can see that 62% of all the respondents indicated they remained at the same staffing level for the past year, with 20% only indicating an increase. So despite the fact that we're seeing slight increases in the availability of manpower for Treasury, the bottom line is that a significant portion of Treasury and Treasury teams are understaffed and struggling to perform all of their work responsibilities. To counter this ever-increasing demand on our internal resources, companies are investing in Treasury technology. TMS solutions are providing more functionality for a larger number of firms and at a lower cost. By simplifying and automating workflows, gains in operational efficiency leads to a more strategic focus, and Treasury teams are better able to be proactive versus reactive when faced with a multitude of responsibilities. When we ask the question, where will we be spending money and will it be focused in technology, we see that 43% of the respondents will be spending on Treasury technology in the next year, followed by payments, reporting, and bank account management. So maybe, Craig, this would be a good time to pull in our polling question and ask our audience, how many of you are planning to build a business case for Treasury technology? So we have 0 to 6 months. When do you plan to build this business case? In the next 6 to 12 months, 12 months to 2 years, 2 years or more, or are you not currently planning to build a business case for Treasury technology?
Yeah, that's great, Debbie, and thank you for sharing. We'll share the results in just a moment. So this is just good to see where the audience is in terms of building a business case or doing the financial payback for this type of project. It's useful to see. I think the other thing to note on the data that was shown, where we saw Treasury is 43% of firms plan to spend significantly on Treasury technology. They may still need to complete a business case, get approval, and compete for other funds. But we've been in a period of multiple years where spend on Treasury management systems and plans to spend significantly has been very elevated for a significant period of time. 43% is very significant. So if we're going to move the the box over just a little bit so you can see some more of that chart. If you could do that, I don't know if we can actually read maybe it's too much on the screen at once. But you can see there are some elevated, oh, perfect. So you can still see payments. 30% of firms plan to spend significantly. And cash reporting, which sometimes is viewed as part of a TMS or viewed as visibility, fits there. And you can see bank account management is also significantly elevated. So when you look at these, there are significant plans to spend on technology. There's a demand for it. But where does it come from? How are they making the justification? Because you're competing for dollars. So that's why the business case and determine the ROI makes a lot of sense. We're going to share the results so far. There's a lot more people who can still vote, but I just wanted to put that out there. So 46% aren't currently planning to implement a TMS, so that's either because you have one or it's not appropriate, so that's great. Of the remainder, number one is, well, it's 0 to 6 months and 6 to 12 months, and then 1 to 2 years. We go from 18, 16.5%, 15.7%. Debbie, when I look at this, I think this makes a lot of sense. People listening to a webinar about making a business case or determining the return on investment, going to a webinar like that, it would make sense that they're planning on doing it in the relatively near future. I don't know, any thoughts on this from what you're looking at?
Yeah, I agree. And for those that are in that 47, 48% that aren't currently planning to implement a TMS and maybe already have one, stay tuned, because later in the presentation we are going to be talking about, a little bit after implementation and some of the things that you want to focus on, even if you already have a Treasury implementation, to make sure you're optimizing and utilizing the system to its full efficiency. And maybe you think some thoughts a little bit about how you might want to go back after an implementation and sort of calculate that ROI. So if you haven't done it on the front end, this might be a good opportunity to do it on the back end if you already have a TMS to sort of justify that business case and the efficiency gains that were achieved for some good advertising and publicity for Treasury and what's been accomplished.
Thanks, Debbie. And we'll move the poll off the screen. Thanks, everyone, for taking part in that poll. Debbie, is there anything else on this one that you wanted to cover this slide, or should I move on to the next one?
No, I will let you take over. That sounds good.
Yeah, so what's the current landscape of Treasury technology? There's obviously a lot of changes that go on. When people think of Treasury technology, they think of the bank portal, they think of Treasury management systems, maybe they think of investment hubs, maybe they think of payment hubs. There's some different categories. I won't spend too much time on this chart, but if you look around the outside, the darker blue rectangles contain the major groups of items that we see from a technology perspective. And obviously, as time goes on, people expand their offerings and capabilities to include more functionality, which bleeds over to other areas within their sector or into the other sections of the landscape. So at the top left, you see Treasury management systems or Treasury risk management systems, liquidity portals, and in-house banks. So you can see things like netting and currency trading falling into that broader category. Now, your experience may be you might use a bank portal, you might use a Treasury management system, you might integrate that with a trading platform such as 360T, for example, for doing your foreign currency transactions. So there's a universe of items that handle those. When we look down below at the lower left, you see risk management. These can be tools that are geared for identifying exposures. Those exposures might be known in the financial statements of the organization. So it's a data retrieval aspect, or it might be measures and systems to identify exposures that might be housed or found in the heads of people. So instead of them emailing or sending information, there's ways of having them capture and validate expected transactions or flows that would show an exposure to perhaps foreign currency flows, as an example, and other elements of risk. As we go around the upper right-hand section, we have tools that are compliance-related, things that help you file for FBAR or support counterparty risk management, investment policy. It might be things that help you comply with different regulations, or control your bank accounts, or lock down spreadsheets. So when you depend on these spreadsheets, they can't be changed unless there's an approval process, an official approval process. So those are some of the elements there in the compliance related. In the working capital and cash conversion cycle, there's an entire range of products, many which are offered by your banking partners to help on the payment side or the collection side, anywhere from extending credit to collecting to the business process of ensuring that the data and the information flows properly from one organization to another. And then on the bottom right, we have Treasury visibility. This is understanding and being able to see everything from where is my cash, what currency, what bank account, what part of the world is it in, to seeing other elements, other exposures. Not only my counterparties, but what instruments do I have? Where is my cash flow, in order to collect? What are the elements that can impact the flow of funds, the value of my assets, et cetera? So the idea of I have to connect to other places all fit into this, like using Treasury aggregators, such as a component that can provide payment hub functionality where we send files into a system or a service, and it takes care of putting them in the right format for each bank or whatever delivery mechanism they're going to use to send those payments. And the same thing for handling the aggregation of information coming in. You're dealing with 50 banks, and they're reported in 3 different formats across the globe at different times. You can connect to them all individually on your own, or you can leverage services of Treasury aggregators that will pull them directly, go through a network like Swift, and put that data in the formats you need into your Treasury management system, into your reconciliation platform, into your ERP. So this is the view of the overall landscape of some of the different tools and technology components. And depending on who you work with and what tool you're looking at, you'll find increasingly these functions bleed over, and people continue to expand their systems to cover adjacent spaces based on their needs. So with that, I'm going to move to the next one as we continue to look at that current landscape of technology. The view of a treasury management system is usually thought of as it handles, where's my cash? I can move cash, at least for treasury purposes. I can forecast it, and I can create accounting entries off of the activities that either originate from somewhere else and show up in the bank, or they originate within the treasury management system that I'm using. And then as you see over time, there's much more functionality that can get added to different treasury management system platforms that include managing all of your bank accounts, connecting to different trading systems, trading platforms, whether it's foreign exchange or other trades, as well as doing financial modeling, hedge accounting, or leveraging other functions such as netting or in-house banking within the platform. So the concept is the treasury management systems used to be isolated in 3 sections: a cash-oriented system, a risk, and an enterprise risk type system. Now, as technology has grown, their capabilities tend to grow, and it becomes even more modular, where the functionality continues to expand, and people can add functionality as they see fit, and everything's updated pretty much at the same time for users of a particular platform. Now with that, I want to turn it back over to Debbie to touch on the next couple of areas.
Thank you, Craig. So one of the questions that we get asked a great deal is, what size organization do we need to support, a TMS or, technology solutions? And, typically the answer is, the higher revenue, the more likely, a company has to benefit from a TMS. And when we look at some of our survey responses reflected here, Those responding to our cash forecasting and visibility survey, 42% of the respondents had annual revenues of $1 billion or greater. And you can see that at the bottom of the left-hand side. I'm sorry, not at the bottom, but is an aggregation of those lower ones. But 42% had $1 billion or larger. And on the right-hand side, we can see 58% of the smaller companies are still using Excel spreadsheets. And that may meet the needs of smaller organizations, but typically as organizations continue to grow and expand, more automation is necessary. And we can see that 3/4 of the larger organizations are using some form of a Treasury solution. And the nice thing about what's been happening is as your complexity grows, and we'll see this later on in the presentation, so I won't steal Craig's thunder, but what we've seen, and you can sort of see depicted in the chart on the right, is that there are installed solutions, but now there's also solutions that can grow as the organization grows. So with the availability of software that can be purchased in modules so that you can scale up as your company grows, all the way up to the high extreme of commodities and risk management, there's a whole spectrum of solutions that are available now. And although Excel is a great tool, it does become a challenge in terms of stability over time, and it doesn't offer the flexibility that a lot of organizations need as they continue to grow, in across the globe, or as they continue to expand through mergers and acquisitions. Some other complexity considerations that you might want to think about is that organizations have multiple needs, and the things that you might want to think about is, how many different money market portals are you using? What are my hedge accounting responsibilities? Do I have that? If you have complexity that's growing in terms of the number of currencies that you're active in trading in, the different regions that you're operating in across the globe, are you using an ERP system or potentially multiple ERP systems? All of these things will add to the complexity structure of your organization and help to build the case for a TMS. While TMS is the most common technology for Treasury, there are a variety of other solutions to support the organization. I think Craig covered those really nicely in that one chart that sort of showed the overall landscape. I think often we forget to think about the complexity of our organization, even as it exists today, and truly the number of different areas that we're working in, and where automation or technology is touching the Treasury group. So the revenue is a key factor to consideration when looking at technology. I think this diagram helps to show the diversity of solutions employed by various sizes of organizations. In addition to TMS, include some of those other areas such as the FX platforms, money markets, Treasury aggregators. And when building your business case for a technology solution, complexity factors are a key area to consider and to include in your analysis. Think about the mergers and acquisition activity that you're involved in, the number of investment or debt instruments that you may be trading with, and don't forget to include in your business case bank connectivities. There's a component from an IT side that also adds to the complexity, the number of banks that you're working with, the areas of the globe in which you're working with these banks, and the various needs you may have in terms of connecting to these banks. As you add automation or solution providers, in the beginning you may have a very manual process of connecting with your bank, and that's one thing that you want to make sure that you document and take into consideration when you're looking at providers or solutions that might help automate that. Craig, is there anything from this slide that you would like to highlight or talk about regarding complexity?
I think the point is that these systems are one indication of complexity. The volumes, the interplay, the number of systems, even non-Treasury systems, financial systems that have occurred through acquisition. So there's certainly a number of factors that add to complexity and that have to be solved either by people, technology, or a combination of both.
Great, thank you. One of the things we didn't touch on in this last slide, and I don't think it changed for me, hang on, sorry, there we go, is, I didn't mention payments. Payments is typically a traditional area of responsibility for Treasury, and I think this slide gives us visibility into the complexity for both small and large organizations. And again, in this slide, the smaller organizations are represented by the light blue bars, and larger organizations, which are greater than $250 million in revenue, are represented by the darker shaded lines. We're juggling, Treasury juggling when it comes to the payment mix, the number of payment types, the number of banks that we may be working with. This additionally adds to the complexity when considering all the various payment types and the fact that Treasury often handles the payments for subsidiaries, regional offices. Payment volumes and the number of accounts can become problematic, to say the least. Smaller organizations here are reporting 35% have between 25 and 100 accounts, and that's a lot to manage. When we go back to the beginning, talking about a Treasury staff size of 3 to 4 or less. And then the larger organizations are running with 101 to 500 bank accounts. So, this is a complexity factor in addition to the ones that we mentioned on the prior slide, just specific to payments, bank account management. I think we all know as Treasury professionals the pain and suffering that can go into managing 25 to 100 or 100 plus bank accounts, the number of bank relationships that have to be maintained. And just the documentation alone can be quite overwhelming, not to mention the various payment types and the different payment formats that we may have to deal with as we're making payments across the globe. Craig, I'll turn it over to you to add any comments that you might have regarding the complexity that's added with the payments, and then to take us into some of the key challenges when trying to fight for those budget dollars.
Certainly, I like the chart on the left where everything stepped up by an order of magnitude. We go up to 100, to 1,000, 10,000, 100,000. Very different organization that, maybe a manufacturer does 1,000 payments a month versus a non-bank financial institution that's doing more than 10 million payments a month. Totally different scale, totally different controls, concerns, level of attention, requirements for forecasting, et cetera. So we'll like to, I'll just move on from there. So the next concept has to do with limited budget, and on the right-hand side, we have a chart. This is really talking about payment technology, not just treasury management systems. We didn't ask specific questions about the amount that people plan to spend on treasury management systems in this particular survey data that we're showing. But the point is that every organization fights over spend and budget, and part of the reason for doing that is that there's so much to be considered. There's a lot of things, moving parts, are using capital to acquire firms, to integrate existing systems, to manage and reduce your risk. But just as you can see here, I think there's a point here. If you look at people planning to spend on payment technology, in the next 12 months, you have 22%, less than a quarter, plan to spend $500,000 or more on that. And that's an area of significant spend. And if you look down below, you have about 31% plan to spend $100,000 or less. Well, $100,000 may seem like a lot of money to you if you're a very small organization. It may seem inconsequential if you're larger, but the point is it isn't very much to put in new systems to handle all the faster payment types, to connect to different banks across the globe, to handle multiple currencies, to handle transformation. So as you can see, there is a significant range of commitment on companies to spend on these different areas. If you're in the business of payments, you're oftentimes willing to spend quite a bit. If you're not, that's considered overhead. the point here is that organizations have a constraint on spend and have to provide support and reasons for that. And this includes making the economic reason for it as well as the strategic reason. We need that to support our business. That's essential. And here is what it's going to save us for the things that we can measure. So with that, I'll take the other side of the limited budget. It has to do with what type of software you might get. And in this case, we're looking at Treasury software, in particular, things that are related to Treasury management systems or Treasury risk management systems. So with that, you can see at the bottom end of the scale, you have many organizations use spreadsheets, very low cost. Everyone has a spreadsheet on their computer. You can make changes very rapidly. You're the programmer of sorts to handle that. Very great for modeling. Obviously, you run into some challenges as you extend the functionality. At the very top, you have global risk or enterprise treasury systems that handle all kinds of financial exposures, management of data. They do modeling. They can run different scenarios. So running different scenarios might be, what happened in 1987, what happened in 2000 and 2007, how will that impact our cash flow, how will that impact the value of our assets, what if we stress different factors, interest rates, commodity prices, etc. So very, very large functionality there. And you can see the price tag gets a little bit bigger and the price tag gets smaller as you move down. But through this mix, you have a number of entrants coming in that help fill out this continuum of capabilities and costs. And what's been great for users of this technology is that the capabilities have continued to increase, the usability has gotten easier, and the cost has generally come down, particularly in the lower end of the market. They're leveraging technology. It's created that situation of the democratization of Treasury. Much better technology is available to a $500 million firm now than was available to a $5 billion firm 10 years ago. Just more capabilities at better pricing. Still significant and has to be managed, but the capabilities are there. So you have everything from the on-demand self-service TMS, like a Treasury Express, where the setup is extremely fast. You can get your visibility, perform many functions, all the way as you move up to larger risk systems where you're dealing in many countries. You're connecting that system or platform to other portals, and the data is integrated. The processes are clean. Everyone's working off the same version of the truth, the same set of data, and the same process as part of an enforced system to manage visibility, reporting, analytics, etc. So the idea that there's a limited budget isn't always bad. It's a fact of life, and the fact that there's a range of solutions means it's critical to match up your needs with what's available in the world so that you're buying the right type of technology to meet your capability needs and hopefully your budget. And part of the reason, or part of the way to meet the budget is to make the case for it. You might be able to move upstream and get a more complete system when you can prove the value of it. But continuing that discussion, building the business case, not just the ROI, is usually it's a social thing. It's not just a document. It's making sure that others in the organization are on board. What does Treasury do? Where's the value to the organization? And the fact that Treasury doesn't sit in a complete silo. They don't just order bank things and nothing happens. They control much of the cash flow of the organization, certainly the fulcrum point of it for borrowing and investing. They manage and provide services from banks for the inflow and outflow of funds. So there are a number of stakeholders that have influence. So when you're making your business case, you're going through it, you're involving others. An interesting area for securing Treasury technology usually is oftentimes there's an accounting component. This shared service center may have a small army or at least a regiment of people that are doing accounting for the high volume of Treasury activity that's coming through the banking systems and out of the Treasury system. Putting this technology in place and automating the vast majority of that accounting can save, quite a few people's worth of time. And we've seen some cases where that alone has more than paid for the entire implementation of Treasury technology, because it's this giant lever. It can be automated. It can remove a range of errors and activities for organizations. So the concept that there's internal stakeholders, there's other people that are trying to get their jobs done and do them well, and they're also competing for resources, means your selling process or working with internal stakeholders is a vital part of it. It could be accounting loves it because they don't have to have 15 people doing accounting. They can reduce that significantly because it's just the transactions. It may be internal auditor, the Sarbanes-Oxley group, that all of a sudden they're a lot more comfortable because all of the controls are now built into the system. They're enforced by the system, not by a separate log or someone does a handoff and they have to watch it to make sure it's right. So those are vital elements, making sure you're socializing the change that's necessary and getting buy-in. The chart on the right, the one that's the bar that's blue, this is for an SCF program. What were your main challenges? And I use that as an example or something that's indicative to, when you're making changes, what is the hardest part? What do you have to get done, et cetera? And in this case, with supply chain financing solution, getting buy-in from all the necessary internal departments was deemed as the #1 most challenging area for that. Now, if you have a system that's completely standalone, it only impacts your area. You don't need to be the good corporate citizen. You don't need to socialize it because you're optimizing something that falls within the process that sits completely within your borders. But much of Treasury also has an impact in other areas. So the cash conversion cycle, it touches AR, AP, sales, etc. How you do this impacts financial reporting, visibility, risk management. So to the extent that you have functions, you have processes that you can enhance or impair because you interact with other departments, this is an indicator that we need to be intentional about getting buy-in from other areas, and that it's not easy. Just because it's important to you doesn't mean they'll understand how important it is to you. So I'll move along just to be mindful of the time. So building the business case, what are some things to think about? So we have Treasury at the top here because it's Treasury's business case. And I'll just roughly talk that diagram on the right. The blue stream coming off of Treasury on the left-hand side. Enhanced straight-through processing with enterprise resource planning solution for streamlined general ledger postings and reconciliation. Part of your business case is related to accounting. It's related to reducing errors in the process. And this efficiency play is important. It can reduce people involved in very mundane tasks, how much resource have to be assigned to that, and the reduction in inefficient processes, non-straight-through, reduces errors, makes life a lot better. Down in the middle, upper-level management, this is a plea for pushing data out to senior management. They need data, they need visibility. How can I give that to them and other people in the organization when they need it, in the way they need it, without teaching them to get involved in a system? It's a much easier way to get data out. And there's value in that, getting data out to the right people in the most efficient way possible, letting them ask the questions or self-serve. On the right-hand side, it's a capital play. If I optimize working capital, I can make sure I get discounts when they're available. I can leverage my payable stream, et cetera. I can use working capital more effectively, which has a return factor as well. So those are three of the key elements on this chart that we need to think about when we make the business case. It's about efficiency, it's about visibility, and it's about the capital play. Now, we just continue for this one slide, and I'll turn it back to Debbie. There are other elements to the ROI, and there are strategic elements. The ROI are things that you can quantify. On the left-hand side, you can see them. What does it cost to maintain the existing systems I have to support the hardware? You know, the test system, the production system, maybe a user acceptance platform, maybe a sandbox. What do I pay for those things? If I move to another platform, how much can I reduce? Hard dollar savings. How do I simplify my connectivity and connection costs? The data transformation as I move data from one place to another. What kind of staff time savings do I have? Can I leverage my data in one place or pay for it once and leverage it across the organization rather than paying for 4 subscriptions to rate data? I pay for 1. I use it everywhere. It's the same source data. I don't have to reconcile differences in rates because I'm using an end-of-day rate from this one provider and a middle-day rate from someone else, et cetera. So there's a number of items that are very quantitative that you can capture. There are many items you can't capture, and they can be identified, and you just identify them as uncaptured or unmeasured. On the right-hand side, strategic considerations are those things that you do because you need to do them to help the organization meet its objectives. You may or may not be able to quantify it in a way that is comfortable. So risk management is we have a certain level of exposure we're comfortable taking as an organization. We may not be able to say what is our real cost for bringing that in alignment in a way that everyone's comfortable saying that that's what the cost is, but the organization isn't comfortable taking on a risk bigger than a certain level. So you're making sure that through this process, you're keeping the risks aligned with your risk appetite. That's usually considered strategic. You know, when the executive manager says, no, we don't want more than $100 million fluctuation in our income from FX. Okay, here's what we're doing. Here's the insurance we're putting in place to manage that. The second one is the same, scalability. You don't want to talk to the CEOs on a buying binge and saying, I'm afraid we're not going to be able to buy any more companies because we operationally can't support that. We have to be able to take on volume and complexity gracefully. And what I mean by gracefully, as opposed to in a clumsy manner. If we add a whole other company and we can't realize any economies of scale, reduced systems, reduced people that are required to do it, increased volume, et cetera, the organization has to be able to scale from many places. That's important, et cetera, et cetera. And strategic considerations might be we're exposed for all these potential frauds because there's all these handoffs. People could get access to our files, change data, and we suffer a loss. Now all the approvals are going to be baked into a system, and that will designate the control. That's the only place that you have access to that data, those files, this information. It provides control. Those are strategic reasons, and people will oftentimes spend significant money if they are strengthening their risk, their control, their security, their scalability, anything that meets the overall mission and objective of the organization. So with that, I'm going to turn it back over to Debbie.
Great, thank you, Craig.
4 case studies.
We've got a couple of case studies. I'm going to go through this one rather quickly so that we can continue on some of the content material, but this is a case study from one of our clients that was a U.S.-based manufacturer of electronics and circuitry devices. They were looking for a TMS solution to assist with global visibility and connectivity. They were very strategic in terms of thinking about what their priority of needs were and looking for the right solution that could scale with them. They're a very inquisitive company, so scalability was critical. And this gives you an example of some of the ROIs that were achieved through the implementation of this TMS. They were able to reduce their cash balances worldwide by 75%. I think that's a pretty staggering amount. Resulted in $8.6 million in unlocked working capital. They had regional treasury teams across the globe with almost no insight, no visibility to any of their bank accounts, maybe less than 20% originally, the key concentration accounts. So they were able to get significant improvement in their visibility and reduce their cash balances. It gave them the ability to centralize Treasury from reporting so that they could report to senior management on a global basis. It also gave them visibility to their risk exposures that they did not have before. Increased their security tremendously by giving them a single set of multi-layered access points for payment initiation, approval, process, straight-through processing, eliminate a lot of human intervention and errors. And then ultimately, as they connected it to their accounting system, their ERP system, to automate the accounting entries that were related to those workflows. It was a significant global project for them, and they had global support from the various regions. Everyone, I think, initially was a little hesitant and afraid, as anyone is when a big project starts, but they knew there were going to be some big wins. So there was a lot of good buy-in, and they were able to share in the benefits globally. They were very price conscious, and there were some negotiations there, but again, they chose the solution that was the right fit for them at the time, as well as one that could ultimately grow with them in a smooth and uninterrupted process. So the company's now in their third year of using the TMS, and it was, I can say, a very successful, on time and on budget implementation with significant working capital achievements. And Craig, I think you're going to share with us the next case study from one that you worked on.
Yeah, and this is just highlighting and pulling a couple items out. Case studies are useful to see what others do. Sometimes it's relevant to your particular situation. Other times the individual items aren't, but the concepts may be. This was a very large European-based company, global presence. They used a lot of different systems, spreadsheets, et cetera, and they wanted to centralize into some technology. A TMS solution made sense. When we looked at it, there was a lot of very inefficient processes, rekeying of data and information, and not only is that inefficient, but you have to check it, you have to balance it. The lack of straight-through processing is very inefficient. Some of that was measured, some of that wasn't, but they knew the pain from that inefficiency. The controls were very, very important to them, and it was just hard to get the level of controls that they wanted without putting it into a single system, as opposed to jumping around from one place to another. Requests to move funds were coming in via email, which would be fairly easy to spoof, and it really created challenge and concern. On the financial value side, just a couple of the items we bubbled up in this case study. They were able to maintain bank portals as backup systems, and despite doing that, they were able to knock off some users and reduce some extra fees that they had, saving $3,000 a month. They were also able to reduce some connectivity charges. So in addition to other savings, just by moving to a single platform, they were able to knock off $60,000 in these areas alone, helping with their ROI, proving a more integrated, a better system worked. So this gave them a single view of their accounts, their controls, their exposures, and made the process much more straight through, allowing them to scale and be controlled at the same time. I'll turn it back to you, Debbie, for the next slide. I'll advance it.
Okay, great. Thank you. So we've talked about the business case, and let's move on to some challenges to watch out for during implementation, and then maybe some follow-ups about, after post go live. It's not always easy to know where the challenges will arise during implementation, and even when we do our best to identify potential challenges, it's difficult to gauge just how much of a hindrance or risk is going to be involved. On the right-hand side, we asked, what was the biggest challenge associated with implementing the expectation with, we asked the question, what was the biggest challenge associated with the implementation? And the expectation was sticking to the roadmap was the key challenge, but in the reality, after the fact, they listed that what really was their biggest challenge was effective communication with the vendors and the support teams. So support teams can be your bankers, it can be the internal departments within your organization. But surprisingly, what they thought was going to be their challenge ended up being very different from the reality of what was their biggest challenge. I think what's key is having a structured project plan with scheduled meetings. That's critical to a successful implementation. Consider, as in the first case study that I mentioned, applying phase control. Identify what's your phase of implementation. Review those different phases. Make sure that there's quality control in each, that you're tracking to your expectations, both in terms of the functional deliverables as well as from a cost perspective. Collaboration is going to be key with any project, so invite as many impacted parties to the table as early as possible. That can include, IT, tax, accounting, procurement. There's number of different areas that are going to be impacted and recognize benefits from this project. So make sure you identify and involve them early, and try to identify challenges and opportunities and benefits from each of the stakeholders' perspectives. Don't forget your external stakeholders as well. They are going to be members of the team, your bankers, other vendors, software providers, technology solution providers are also going to be stakeholders. It's going to be critical that you keep them informed, you give them timely notification of the project, expectations from them, so that all this can be worked into the timeline. From the time you begin to after you go live, collaboration and clear communication is going to be critical to implementation. And if I can get the slide advance, here we go. Don't underestimate the time for a successful implementation. This chart shows that 72% of organizations expected the TMS implementation to be completed in 9 months or fewer. The reality was that 52% of the implementations took at least 9 months or longer. At a high level, implementation of the TMS can be broken down into the phases that are sort of reflected there on the left-hand side, 1 through 6. And I'll just sort of give a couple of highlights as to each phase, just to give some indication. Initiation is going to encompass ownership, charter, requirements, communication, plan. The planning is going to include project scope, functional and technical requirements, potentially an RFP or an RFI. That may even be run as a separate project, so make sure you plan accordingly. Is that going to be a part of this one encompassing project, or is it going to be broken up into 2? Often the timeline can be very distorted because not enough adequate time is devoted to the RFP process separate from the implementation process for the entire project. The building is going to be the development and configuration of the system and testing, developing test cases. Validation is your user acceptance testing, your training and developing your cutover plan. Go live is the cutover execution and the transition from your implementation or project support team to your customer support team, and then monitoring and support. Once you go live, don't stop monitoring and review this and thinking about support. Do a post-go live lessons learned review. Schedule an annual assessment. What are upgrades? What are the efficiencies that were achieved? Where are there some gaps? What are the remediations to those gaps? And then take a look annually at optimization. Where do you need to go next? How do you need to continue to move forward to advance? Ensure that your realistic timelines for each phase of the project, not just the implementation phase. And let's see, moving through here. Take time to evaluate and build your technology solution to fit your objectives. This is really important. Surveys show that 60% of teams who undergo a TMS implementation in the past are currently using less than 80% of the TMS functionality. To me, that's a clear sign that not enough planning is going into the building of the technology solution from the get-go. So make sure that you know your needs for data, analytics, reporting, workflow, connectivity. Keep all these touch points in mind, your internal and external parties, so that you build a solution and purchase a solution that truly meets your needs and that you can optimize effectively. Craig, I'm going to turn it over to you for the last few minutes to wrap us up and hit the key takeaways.
Yeah, so thanks for that summary at the end. I mean, as you get your approval for the business case and the ROI, there are key considerations as you move into the implementation. If you don't do those right, you're not going to get the ROI you calculate at the front end. But just a couple takeaways. I think the first part we say there is your capabilities need to align with your organizational complexity and your plans. It doesn't matter what others are doing. You need to align those to yours. Second is you've got to sell it internally. You need buy-in from multiple people. You're competing for dollars. Third is there's strategic and financial reasons. Not everything comes down to ROI. You can't quantify everything, even though we like to think that. But I think it's important to know that put the financials in there, make it strong, and identify the strategic reasons for those changes, whether it's control, visibility, flexibility, scalability. And finally, as Debbie gave you a lot of ideas, start the project well, and nothing succeeds like success. Before I turn it back over for announcements, one, I want to thank you for listening to Debbie and I on this and joining with us in the chat box and on the polling question. But I also encourage you to, if you look in the chat box, you can see the LinkedIn group. If you're not a member of our Treasury group, please click on that, and we'll get you connected there. So appreciate your time. We've got a few announcements. There's one question about how are Treasury decision makers looking at fintechs, cloud-based APIs, and competition to traditional TMS vendors. Great question, Summit. I think a lot of that's fairly new to the decision makers, using APIs as a third-party technology provider to grab data and get visibility. That's fairly new. People are learning about it. They're very interested in it. So it's an early stage, but it's fair to say that technology will make a significant change in how people look at it. That's actually a great question for an entire hour-long session, so thank you. I'll turn it back over to you, Meredith.
Wonderful. I just want to thank everyone for attending today's webinar. We really hope you enjoyed the presentation. We're going to stay online for just a few more minutes in case there are any other last-minute questions, but please continue to check our website often as we host many webinars throughout the year. And finally, just a reminder that we will send out the presentation, a recording, and the credit forms within the next 7 business days. Thanks so much, and everyone have a great day.